Now, for more on inflation in China, I'm joined by Sara Hsu, live from New York. She's Assistant Professor of Economics at the State University of New York at New Paltz. Welcome to the show.
Thank you for having me.
Now, let's start with a look at the Producer Price Index, which measures the cost of goods and services at the factory gate. What are some of the factors behind its continuous rise?
Right, so we've seen a really high PPI for the past several months, and PPI has been high due to declining overcapacity in commodities producing firms in China. We've also seen increased demand from China's manufacturing sector. There's increased demand related to rises in the PMI, Purchasing Managers Index, as well as to continuing construction in real estate.
So then what's your outlook on how, say, factory prices and in turn profits will fare going forward?
They may not continue. Some analysts have predicted that PPI is going to level off and then start to decline as commodities prices decline. We see a potential steel glut in China. We see relatively higher oil inventories. But again, this is hard to say. The steel demand could increase as a result of increased construction in Xiong'an and other areas in China.
Now, a lot of people are wondering, can that momentum that we've seen in the PPI, can that transfer perhaps to the Consumer Price Index, and how long do you think that might take?
It doesn't necessarily transfer directly over. Some of the funneling over to the CPI may happen as a result of increased investment. As firms who have experienced rising prices have greater profits. But the CPI generally has a larger percentage of its composition focused on food prices, and food prices have been declining.
As you mentioned, certainly seen a lot of movement in food prices. So then how do you see the CPI performing in the short to midterm?
Well, some people have been predicting that the CPI may be starting to rise over time. The CPI is down from a higher base last year, where food prices were higher. And we also see a higher non-food price component of the CPI, especially in the garment industry as well as in the healthcare industry. So it's most likely, I believe, that the CPI is going to start to rise.
Now, what do you see as some of the potential headwinds or challenges in that outlook?
We see there's a lack of certainty over what's going to happen with the food prices. We're not entirely sure what will happen with China's consumption in the non-food areas.
Now, let's also turn to issues of inflation and money supply. What's your outlook there?
Well, we're looking for a higher inflation overall. We would like to see a higher CPI, actually. Positive inflation at a low level is really beneficial in terms of indicating overall consumer growth. And China's at a relatively low point. If this increases, then China can increase its interest rates, its benchmark interest rates, which would be good in tamping down overall debt in China.
So then perhaps what additional action, if any, do you think China or its central bank might take in this regard?
Well, the central bank will probably continue to address interest rates through the money markets, which is the bank-to-bank, the interbank markets, rather than focusing on benchmark interest rates, which would indicate to consumers that they should decrease their consumer activity.
And just lastly, what are we seeing in terms of the amount of consumer demand? I know that we're looking at a lot of domestic demand in China's economy. How do you see that faring?
We see domestic demand. It had an increase during the Spring Festival, but overall it's been relatively low, so we would like to see that pick up in the next few months.
All right, thank you so much for your insights, Sara Hsu.
Thank you.
Assistant Professor of Economics at the State University of New York at New Paltz.